I know a guy who made 2.3 million trading last year. You never heard of him. He has zero social media followers. He doesn't sell courses. He doesn't do YouTube videos. And he thinks differently about trading. Every guru you've ever watched. Meanwhile, I know another guy with 300,000 YouTube subscribers. Sells a $2,997 course. Posts daily market analysis. Shows screenshots of winning trades. And lost $47,000 of his own money last year. Today, I'm going to show you the psychological differences between these two types of people, because understanding this will save you from wasting years following the wrong mental models. Here's what I've learned after studying both groups. They think about risk completely differently. They have opposite relationships with being wrong. They measure success in ways that would shock you. And they approach the market with fundamentally different mindsets. By the end of this video, you'll never look at trading content the same way again. And you'll understand why. The people making the most money trading are the ones you've never heard of. Psychological difference number 1. Their relationship with being wrong. Here's how YouTube gurus think about being wrong. I wasn't wrong. The market was manipulated. That was just a fake out by the algorithms. My analysis was perfect, but whales moved the market. I was right about the direction, just wrong about the timing. They cannot psychologically accept responsibility for bad calls. Here's how profitable traders think about being wrong. I was wrong, next trade. That's it. No drama, no excuses, no elaborate explanations. Because here's what they understand. Being wrong is not a psychological threat. It's just data. The profitable trader's brain processes losses the same way a scientist processes a failed experiment. Interesting, that didn't work out. What can I learn? What's next? The guru's brain processes losses like a personal attack on their identity, because their entire business model depends on appearing to be right all the time. They cannot afford to be wrong publicly. So they twist reality to avoid admitting mistakes. I watched a YouTube guru make a call that Bitcoin would hit 100K by the end of the year. Bitcoin dropped 40%. His response? This is exactly what I expected. The whales are shaking out weak hands before the real move up. My target is still valid, just delayed. Meanwhile, the profitable trader I know made the same wrong call, cut his loss at 2%, and moved on. Guess who made money that move? The guru's need to be right keeps him wrong longer. The trader's acceptance of being wrong keeps his losses small. Psychological difference number 2. How they think about risk. YouTube gurus talk about risk like this. This setup has 80% win rate. We could see 500% gains on this trade. My strategy hits big winners 9 out of 10 times. They focus on the upside, the potential, the dream scenario, where profitable traders think about risks like this. If I'm wrong, I lose exactly 1% of my account. My maximum drawdown this month is 3%. This position represents 0.5% portfolio heat. They focus on the downside, the protection, the survival scenario. Here's why this matters. The guru's brain is wired for marketing. They need to sell excitement, potential, and dreams. Look how much money you can make. The trader's brain is wired for preservation. They need to protect capital first, profit second. Look how little I could lose. A guru shows you a trade that made 400% in one day. What they don't tell you, that same trade could have lost 80% if it went wrong. And they sized it with 20% of their account. A profitable trader would never take that bet. Not because they're scared, but because they're smart. They understand something the guru doesn't. You only need to blow up once to lose everything you've built. The guru thinks about trading like playing the lottery. What if this one hits big? The professional thinks about trading like running a business. How do I stay in business tomorrow? Guess which mindset builds lasting wealth? Psychological difference number 3. How they measure success. YouTube gurus measure success like this: views, likes, subscribers, comments saying you're the best, screenshots of the biggest winning trades, social media followers, engagements. Notice what's missing from that list? Actual trading profits. Consistent year-over-year real money profits. Profitable traders measure success like this: monthly P&L after expenses, maximum drawdown periods, risk-adjusted returns, Sharpe ratio and Sortino ratio. Boring numbers that nobody wants to hear about. But here's the psychological trap. The guru gets dopamine hits from external validation. Every like, every comment, every new subscriber gives them the same neurochemical reward as making money trading. So their brain starts optimizing for the wrong thing. They start making content decisions instead of trading decisions. They start taking trades that will look good on camera instead of trades that will make money. I know a guy who used to be consistently profitable trader, made 200 to 300K consistently, quietly, and steadily. Then he started a YouTube channel. Within 6 months, he was taking bigger risks to create content, holding trades longer to show diamond hands, talking about positions publicly before closing them. Last year, he lost $150,000, but his YouTube channel has 50,000 subscribers. Guess which number pays his bills? The profitable trader I mentioned earlier has never posted a trade online, never shown his P&L, never celebrated a winner publicly, because he understands something crucial. The market rewards invisibility. Social media rewards visibility. You cannot optimize for both. Psychological difference number 4. Their relationship with the market itself. This is the big one. YouTube gurus have a combative relationship with the market. We're going to beat the market. I called the top perfectly. The institutions tried to stop us, but we won. They see trading as a battle to be won, a competition against other traders, a game where being right makes you superior, constantly fighting one another. Profitable traders have a respectful relationship with the market. The market is always right. I adapt to what price action tells me. My job is to follow, not predict. They see trading as a skill to be developed, a craft that requires humility, a business where survival trumps ego. Here's why this matters. The guru's combative mindset creates psychological resistance to cutting losses, because cutting a loss feels like admitting defeat, like surrendering to the enemy, like proving they're not as smart as they claim. So they hold losing trades, hoping to prove the market wrong. The trader's respectful mindset makes cutting losses feel natural, because a loss doesn't threaten their identity. It's just the market saying, not this time. And they listen. Watch any guru's live stream when they're losing money. This is just manipulation. They're trying to shake us out. Hold strong, this will reverse. And so on and so on. They're fighting the market. Watch a profitable trader during a losing streak. If you could, which you can't because they don't broadcast losses, market's not giving me what I need right now. Position size down, wait for clarity. They're listening to the market. The market always wins these battles. Always. The question is, are you fighting it or working with it? So here's what this all means. If you want to learn to trade profitably, stop following people who make money from teaching trading. Start following people who make money from actually trading. But here's the problem. You can't follow them because they're invisible. The most profitable traders I know don't have social media accounts, don't sell courses or coaching, don't do interviews or podcasts, don't write books about their methods. They just trade quietly, consistently, profitably. So how do you learn from them? You adopt their psychological frameworks. You measure what they measure, actual P&L, not social validation. You think how they think, risk first, not reward first. You relate to losses like they do, data, not disasters. You approach the market like they do, with respect, not arrogance. You stop trying to be right all the time and start trying to be profitable over time. You stop optimizing for content and you start optimizing for capital preservation. You stop performing for an audience and start performing for your account balance. Because here's the uncomfortable truth. Trading success and social media success require opposite psychological traits. One requires humility and visibility and boring consistency. The other requires confidence, visibility, and exciting content. Choose wisely. Remember those two guys I mentioned at the beginning? The profitable trader who made 2.3 million and the guru who lost 47,000? Here's the final difference between them. The guru wakes up every day thinking, what content should I create? How do I get more followers? What will make people excited? The trader wakes up every day thinking, what is the market telling me today? Where can I find my edge? How do I protect my capital? One is building an audience. The other is building wealth. They are not the same thing. If your goal is to become a profitable trader, stop thinking like a content creator. Stop asking, will this get views? Start asking, will this make money? Stop optimizing for applause and start optimizing for compound returns. The market doesn't care how many followers you have, but your bank account definitely cares how many profitable trades you have. Focus on the right scorecard. That's it.